All right. Welcome to 2026, the first live on this channel. In today's video, I'm going to talk about the Great Housing Reset. You probably heard about the Great Reset here and there on YouTube videos. What is it? What are my thoughts on it? And how would I define it? And so today we're going to talk about the housing market. I'm going to share my screen with you all and actually show you all some articles about some interesting housing data coming out in towards the end of 2025 that may continue in 2026. We're also going to talk on what is my definition of the Great Reset, right? And how does that apply to your real estate investing needs? So first things first, you all like this video and subscribe, hit that subscribe button. I'm going to go live, try to go to live at least once a week talking about the housing market because I like the housing market and I'm in it, I'm investing in it. And so these are my thoughts on the housing market. So this Great Reset, what is this thing that people are talking about? It's just a phrase or a term that was coined since the pandemic. People were using it to describe essentially it was sort of related to a conspiracy theory saying that, oh, the government is purposely doing the pandemic and all the illnesses and so they can reset the population. Reset, just people just started using reset for changes happening in a certain industry. So housing reset or economic reset and all these different terms. It's not necessarily now related to a specific conspiracy theory. It's just a phrase to describe a change. And that's how I'm describing the Great Housing Reset. It's just a change happening in the housing market. So what do I see happening? I see different things happening. And so I'm going to share my screen and share with you all one article, interesting article about the housing market and how I see this continuing in 2026. So what I'm going to do right now, I'm just going to share this screen with you all. Let's do it here. All right. So this is one trend that's been happening. Luxury home prices are rising. So the Great Housing Reset, one negative drawback of it that I see happening is that more and more companies, investors are going to just cater to the 1%. They're going to cater to people who make more money, right? Because they make more money. And there's not a lot of incentives for people to make, okay, there is, but listen to me, to make incentive, there's not a lot of incentives for investors to cater to lower class people or people who need affordable housing. It's unfortunate to hear because I believe you should still do that, right? And you will still make money. But I heard investors in this industry saying, hey, why should I do a new construction for an affordable house when my materials are more expensive, right? My labor is going to cost the same, and I'm not going to make as much. I might as well build $1 million plus home. Sure, it's going to sit on the market a little bit longer, but at least I'm going to make more, right? Because the labor is essentially the same price as it may take a little bit longer. And so your labor might be increased by that, but essentially your price per hour for your labor is going to stay the same, right? And then your materials are essentially the same. Yes, you may have some high-end things here and there, but with it's not going to be so much more. In an affordable house, a starter home, it may be around 300,000, right? And so you're paying for materials, you're paying for labor, and a lot of investors, they're using money from the banks or hard money, and so their interest rates are high. And so all in, they may be around 250, 260 with that house, and they're making 40,000, which is not bad, or even less. And they can do this every 9 months or so, depending on their speed. Or they can just build $1 million home, right? They could build $1 million home. They'll still send the same labor. They may upgrade some materials here and there, and they'll make so much more, right? So for example, 300,000, let's say in today's market, because labor and materials are still expensive, let's say you're able to profit out of the sale price, let's say 10% in today's market. 10% is not a lot of money, right? Or let's say 15%. So 15% of 30,000 is $45,000. Okay, decent. Or you can sell a house for $1 million and make 15%, which is $150,000, right? Yes, a starter home may take a little bit faster, but with working with the state and drawing all these different codes and working with the county, it may take you 6 months to build a starter home. Where $1 million home, you can build it in 9 months, right? It's not that much more longer, right? And so you can get paid 150,000 instead of 45,000. And so this is what investors are thinking of. And so you see this right here. U.S. luxury home price jumps 5.5% in October, tripled the pace of non-luxury homes, right? And so luxury home sales 5.5 year over year at $1.2 million, a record high for October. Non-luxury homes prices grew 1.8 to a median price of 373, right? So investors are seeing this. And also the top 10% of people, top 10, 20% of people, 10% of people, they have more cash. The stock market is up, right? If they already have a luxury home, you see these prices are increasing so they can sell whatever home they have and upgrade it to a even higher home, right? And so, unfortunately, this is resetting. This is a type of reset. This is a factor that's, relating to that great housing reset that I see happening, where you're seeing a change of, once again, the 10% benefiting, while the lower class and the majority of people, lower class or even working class or even middle class, are not benefiting from this, essentially, from all assets going up. The only people that benefit really are people that hold assets, are people that have money to invest, have money to buy homes, have money to invest in the stock market. It's unfortunate, but it's these are what's happening. And there's still so many different factors that are affecting this. One, politics, whether it's the left or right, whatever it is, it's affecting this, right? Different administration changes that's been happening relate and contribute to this, right? And it's always been happening, right? We have inflation. Inflation's been ramping up a lot, whether it was Biden or Trump, right? And so you see that luxury home sales increased 2.9 year over year, while non-luxury sales only rose 0.7%. So there is more people going to luxury homes than affordable homes. And this is crazy. This is something that we have to look at. And we see this happening throughout since 2021. And you see the gap widening here. The gap widened right here, right? It was wide right here. So I see this continuing happening where, yes, the luxury homes are doing well, but not affordable homes, right? Because and this is going to make builders want to not build non-luxury homes, right? So this is one factor relating to the essentially, let me go right here, the great housing reset. It's just, and I hinted at this, is essentially I listened to this channel, right? And he this is how he coins it. He phrased it as, we're becoming a nation of the haves and the have-nots. And most people will be in the have-nots, right? This is a K-shaped economy, right? You hear that where the rich are getting richer and the middle class, working class, poor are getting poorer, right? And it's essentially the top 10% that control everything, right? They control all assets. They generate the most amount of income and GDP, right? They pay the most taxes. And so every company essentially tries to appeal to them, right? Why should they appeal to working class people like me or you when they make more money selling to the 10%? And so that's what I see happening. More people are going to rent. And not only are more people going to rent because they can't afford homes, right? Because this medium sale price is increasing. You have more of these luxury sales increasing. We're also going to have more people not only renting homes, but renting bedrooms. You hear of this co-living space, co-living rental. And even me as an investor, I'm researching. I was just listening to a podcast today about co-living and the benefits of it. I think more and more people are just going to have to settle down and to rent a room, right? On this podcast, this investor told a story of a teacher who was renting one of his bedrooms, right? And she was crying because she was saying, "Hey, I have a master's degree and I can't even rent my own place. I have to rent a bedroom where I'm sharing the bathroom with three other guys." That's unfortunate. That's the economy that we're living in. And we're going to see more and more changes like that. The good thing I would say about that, or one way I would say people should use that, is moving with people you know. Do something, buy a house together with family or friends. Of course, have right paperwork for all that. But I think that's going to increase even more. So you don't have to share a bathroom with three random guys, right? As a woman, right? And so more and more these changes are happening. This is a great housing reset, and I see that happening more and more. Now, another thing I want to do is I want to show just the data happening right now in the market. So we have right here red Redfin weekly housing data. And as you all see, new listings are down for 2025. So essentially ended the year 3.1% down. So less homes being listed. Now homes sold for the end of 2025, it was actually up a little bit compared to 2024, possibly. We'll see at the end. And then medium sell price is a little bit up. It's up only 1% this year. So it's still increasing. Home prices are still increasing, you all. And so, what's my prediction for home prices? Well, I think home prices will continue to have this gap between the previous year, but I don't see it having a huge gap going up so much like this, right? In 2022 or these other years, right? And so I see a 1% growth, 1 to 2% growth in home prices for 2026. And then for let's go over to mortgage applications. This is super important for understanding the data and understanding how much people are actually buying homes. So you can see within the past year, we had 33% increase on January 10th. So we're having these increases happening here, and then you have some decreases. So the volume mortgage application in the U.S. fell by 5% from the previous week on the week ending on December 19th. So that was the last time they had data, was on December 19th, and it was down. So, but this is normal for mortgage applications. I like using that. All Fed mortgage rates. Let's take a look at it. So this is the official federal where they track mortgage rates in right now. And at the end of 2025, it ended at 6.15%. So what is my prediction for mortgage rates in 2026? I think it's going to continue going down a little bit, but I don't see it going down below 5%, and I don't see it increasing over 6.5%, right? I don't think it's going. I think in the first half of the year it's going to stay around 6% flat, right? You might get a week where it's 5.95, 5.9. It might go back up to 6.05 for the first 6 months of the year, but as we know, Trump is bringing in a new Fed chair, and we'll see what happens. And they're going to aggressively, most likely, bring down the Fed rate. Now, it's not directly correlated, but I think it will have an impact. And so I can see towards the end of 2026, I can see mortgage rates being around 5.8%, possibly, or even between 5.5 or 5.8% by the end of this year. Let's see if I'm right or correct about that. But you see, it has been going down for the past year. We went down from 6.9 down to 6.15. So almost a full percentage point. And in some cases, yeah, it was a full percentage point um, happening there. So that's interesting. Let me see what else information we can pull up. All right, this is the Case and Chiller Price Index. This is essentially the medium sell price of homes. That's how they measure it. Scheduled maintenance is January 7th. And so they have it at 328. Unemployment rate. Let's look at the unemployment rate because this plays a role in people buying homes and whatnot. I see the past year. So it has been increasing. This is unemployment rate. So it goes down on January 4%, 4.2, January, and it's just been increasing, 4.4%. So we know this may not be 100% direct. Most people think right now unemployment rate is around 6%. All right, that's what people are saying. But right now, for November 2026, we have it at 4.6%. They didn't release it in October because that's when we had the the shutdown. Alfred, what else do I? CPI. This is inflation essentially. Um, Consumer price index, how much it's been increasing, and so you see that right here. So it peaked out in February and then went down, and then we're going back up. So inflation is relatively flat for the year. I mean, it did increase a little bit, 180 to 186. So we see that happening. And this is the market yield on 10-year treasury. So this closely tracks the mortgage rates. And so within the past year, it's been going down, right? And that's where we saw with the mortgage rates. All right, y'all. Now, another thing I want to show you all that I'm going to give you all just a hint of. I'm going to have another live, but this right here is interesting. This income disparity, this gap between the top 10% and the bottom, the top 10% of earners in the U.S. now account for 49.7% of all spending in the U.S. of GDP. Essentially, consumer spending, 50% of consumer spending is the top 10%. You all, this is insane because GDP weighs consumer spending. I think it's 2/3 of GDP. So consumer spending, if it's 2/3 of GDP and the top 10% controls 50% of it, that means the top 10% controls 1/3 of GDP. Let that sink in for you all. If the top 10% control 1/3 of GDP, companies are incentivized just to market to them, to have products just for them. And essentially, this is becoming a K-shaped economy. This number right here is going to grow, right? Because they're only going to have the money to spend. They're only going to be the ones having the money to spend, and their income's going to grow in everything. So what does that mean for working class people like me and you? I think you got to own assets. You got to support and love the people around you. I think this world. This is more of my personal thoughts, but we can't continue like this forever, right? Essentially, those are my thoughts. But yeah. So the top 10% owns. They control most of everything. And I don't know if there's anything that legislation can change about that. I really don't know if taxes doing different things with taxes can change anything with that. I just know this is the reality of things. And when you have this big gap in in wealth between 80% of the people and the top 20%, it's usually not good for an economy or not good for a nation. But we can continue to grow and continue doing well. And so this is something interesting. I'm going to dive deeper into this. I've been doing some more research. That's why I have this whole tab, income disparity. And I've just been reading different articles. Let me see if I can show you all another one that I like. Household wealth. I see this right here. This is from the Fed. The top 10% holds wealth of had 8.1 million on average. As a group, they held 67.2% of total household wealth. So the top 10 owns this amount. The bottom 50 as a group held 2.5% of all household wealth. So half of the population in the United States only control 2.5% of all wealth. Isn't that crazy? That's insane. The top 20% control 71%. They control 71%. All right, you all. I think I'm going to stop sharing my screen. I hope you all enjoyed this live, the Great Housing Reset. I'm just talking about what's happening in the housing market. Be sure to like, subscribe. I think this is going to change a lot of things. Let me know you all's thoughts. Are you all trying to rent, trying to buy, invest in properties? On my channel, I do talk about how to invest in properties, how to wholesale real estate, flipping, and just my thoughts overall about the housing market. As you all saw in my last video or two videos before, I actually have to take my house flip off the market. I know I told you all it's been sitting on the market for around 55 days and past that 75-day mark. And so I took it off. I've been thinking maybe I should advertise it for rent and just see what happens. But another thing I could do also, I could just wait a little bit and then put it back on the market. I'm going to lower the price because I do need the capital. I can do a cash out refinance, use that capital for something else, but I really don't want to own that property long term. It is a great property, but I think it's time to move on. So I'll keep you all updated on that because I see changes happening in my own market as an investor that I have a flip sitting on the market. This is a telltale sign that the housing market is changing, right? Affordability is a big deal to a lot of buyers. And on top of that, we're not in the same market where my house can go under contract in a week, right? Like all my other flips did, right? I did have it under contract after 17 days, but a buyer pulled out, right? And so more and more buyers are canceling out of contracts. And why would someone buy a house right now when they need to afford groceries or they need to afford schooling or they need to afford other necessities, right? And plus here in the South, I'm in the southeastern part of America, we had a great boom during the pandemic, bigger than a lot of areas in America. And so we're finally settling down and home prices have been decreasing in 2025 here in the southeastern part, but they're still increasing in the Northeast and the Midwest. And I think part of that is that they didn't have as big of a boom as the South, as Texas, as other areas, as Idaho, these areas. And so they're not seeing as much of a contraction as Texas is, right? Because Texas experienced, extreme increases in values. And so it has more of an extreme opposite effect where the Midwest, yes, it did increase during the pandemic, but it didn't jump as much as it did in the South or other areas of America. All right, you all, like this video, subscribe, hit that subscribe button. All right, talk to you all later.